Now let's wrap up the day and really the weekend trading with Jeff Palma, head of global equity strategy at UBS. He's in Stamford, Connecticut. Jeff, let me start by asking you about Egypt. You know, on Friday, it looked like the markets were going to take this pretty seriously. And I'm not saying they don't take it seriously, but they are taking it in stride, everything that's going on in the Middle East. We made up for all of our gains and then some. The first two trading days of the week, we're up about 2.5% now since Monday morning trading started. What do you make of the situation there and its effects or possible effects on the U.S. markets?
Well, a week ago, there was clearly a lot of uncertainty with what's going on in Egypt, and not to say that that's gone away, but I think the big concerns have been about shipping channels with the Suez Canal, impacts on oil prices, spread to other areas within the Middle East. All of those things seem to have been contained this week, and to that extent, I think that's helped markets focus on other things that are not Egypt-related. Those things have been broadly supported, and we've been able to move ahead, as you suggest.
Hey, I also want to bring in Joe Cusick. You're out there from the CME, senior market analyst at OptionsXpress, joining us from Chicago. Joe, first of all, let's talk about the trade here. Interesting day, but the S&P having a pretty good week here after 2 down weeks. Are we beginning to see another leg up in your view?
Yeah, definitely. I mean, the trend, the sentiment in the pits alone with just the traders has been geared towards the bullish side. That's something that's been a tough push right now with the traders. So you're definitely seeing the bias with the trend of the overall market, even though we have these exogenous geopolitical events that are going on.
But we're talking about and if I've got my numbers right, a 2.7% gain in the S&P 500. To me, that's kind of wacky considering what's going on in Egypt. But again, it just seems like the investors kind of shrugging it all off.
Yeah, I mean, on the surface it does, but as the other guest had pointed out, really the concern was what's going to happen with the shipping in the Suez Canal. The fundamentals, though, when you look at the market, are spectacular. The numbers keep coming out. The only thing that's really holding down this market right now is finance, and that's starting to base. And if we can get a pickup in finance, then you're going to see that this sentiment gets full-blown potentially.
Hey, let me go back to Jeff and ask you about the unemployment number. I mean, a disappointment on the surface, right? But people seem to be taking that in stride as well today. What do you think of the big picture there?
Well, I mean, the headline number seems to be distorted by lots of things. Seasonal adjustment factors, certainly the weather played a role, and I think people are willing to look through that for the time being. Certainly the unemployment rate itself falling was a positive factor for the market. The underlying trend in things like jobless claims seem to be moving in the right direction. But we have to keep in mind also the ISM numbers this week, both for the manufacturing and the non-manufacturing side, were very supportive and do suggest that the hiring front is improving. So I think once again we're kind of able to look through the weakness on the headline number and suggest that the underlying economy is still improving.
Let's put that to you. I think Julie brings up a really, really good point. I mean, are we kind of, are we ignoring some really crucial things out there?
Well, I don't think so. I mean, what I would say about the earnings environment is that the underlying revenue picture is pretty good. I think that some of the expectations for margins to continue to expand over the course of this year are maybe getting stretched a little bit. But our S&P earnings number is $96, right? So it's kind of right in that ballpark. But where markets are reflecting that risk is that the PE multiple is still pretty low. By historical standards, it still seems to me that valuations are pretty reasonable. And we've been in that environment for a long time. And I think that reflects a lot of these risks, whether they're geopolitical or economic or earnings or whatever they might be. I think to some degree it is being factored into current valuations.
Hey, let me bring you back into this and ask you, Joe, if we can continue to see employment in the economy that we have seen in the data, and I'm not citing the unemployment number this morning, but we have seen pretty good numbers come out the last 4 weeks, the last 2 months. Do you think the market continues to go up from here, or have we kind of topped out? Because we've gained pretty substantially since the lows of 2009.
Yeah, I think that that's the underlying question right now is that are we going to get a little bit of a top out factor here? Finance has been that drag. Again, right now with the numbers continuing to come in positive, I think the upside right now is the bias that you got to stick with. And unless there is a greater geopolitical event that's going to come into play, or we get something on the earnings side going into next week, I think the bias is clearly to the upside.
All right. Hey, Joe, thanks very much. Jeff Palma, thank you as well. We're going to take